All right, great. Thank you, Michael. It was educational and entertaining as always. I think you guys recognize probably after that why we asked Michael to come back. And the interesting thing today, everybody that spoke so far in today's event is a repeat speaker, and so what we try to do is really focus on the guys that are really going to give you good education. And so what we're going to do now is I'm going to spend a little bit of time with you going through a couple different markets. And then a very good friend of mine is going to come on and kind of close things out for us, Tony Laporta. A lot of you guys know Tony through the Trading Pub, and he's going to cover a couple charts and things that he's looking at. So, the saying, we save the best for last. I figure with me speaking last, we couldn't say that, but now that we've added Tony on, we can say that we're going to have a great speaker for you coming on following me. So real quick, what I'd like to do is just take you through a couple of things real quick, a quick bio on me. I learned about the markets at the age of 16. That's when I started learning. I made my first futures trade at that time. I've traded stocks, options, futures, currencies, and NADAX. So I've traded in just about every market. I had the opportunity to learn from some excellent traders. I'll tell you this, that very few of, and I'm not afraid to say this, very few of my ideas and very few of the things that I know about trading are original. I've really had a wonderful opportunity to learn from some great traders. I learned initially about trading from my father, Tom Busby, and Jeff Smith. A lot of you guys know Jeff Smith at DTI, have both taught me a tremendous amount about the markets. A couple other people that have really had a big influence on me as far as trading goes. And and when I say trading, investing, is I really feel like Larry Williams' work is very good. I don't know if a lot of you guys know Larry, but he focuses a lot on commitment of traders reports, and I've learned a lot from Larry Williams. And then the guy that you're going to hear from today, Tony Laporta, and I'll tell you a few good stories about Tony that have really helped me in my trading. But I've learned a tremendous amount, and I'll talk just a little bit about the bond market. And pretty much everything I've learned about the bond market, I've learned from Tony Laporta. And but I began trading with DTI, or began working with DTI in 2006. Launched TradingPub in July of 2011. And one of the things that I had the opportunity of was to learn from so many different people, and I felt like that there's lots of people out there that have a really good and interesting and different take on the market, that there's value in that. And I think that there's tremendous value in learning from people like you see today. And you take Daryl and Dan and Marcus and Michael and Tony and myself, and we all have a little bit different trading style, but I think that you can pick things up from these guys. And so that was really the mission of the Trading Pub, was to provide a place for free education that you guys could come to, that you could hear from top traders on a variety of subjects. And we've tried to do that over the past year. And one of the things we've really tried to do there is to not only we have the free education, that's obviously the business model and the website, but to try to put a focus on some charitable things as well that we work with, and programs that we support for inner city revitalizations. That's been another big part of it. And just one quick thing, and I'll have to say this before Tony gets on and talks, but as a lifelong Cubs fan, I've been conditioned for patience and accepting losses. And so I think that if you're a Cubs fan, then you kind of have a step ahead of the other traders, because the thing that a lot of traders deal with is experiencing losses. So if you're a Cubs fan, you've got that down. So your chances of being a successful trader for Cubs fans is slightly higher than those guys on the other side of town. So I thought Tony would probably appreciate that. It's funny, Tony had sent me an email last night, saying or in his commentary, I think it was in his commentary, he said, "Go Giants," and I told him that my very least favorite player of all time is Will Clark, because of what he did in the 1989 NLCS, just absolutely tore the Cubs up. All right, well, what I want to talk about today, I'm going to talk a little bit about how I trade NADAX, a couple strategies I use, and then go through some general markets. One of the things that I focus on is, I don't have a lot of things on my charts, and I think Tony will probably tell you my charts are pretty boring. But I look at prices, and one of the things that's really helpful to me, I don't have time to go and research all these different markets, and so as a subscriber to Tony's commentary, I get his commentary every night. I get these key numbers where basically he does the calculations for me. And so, I look at this and I use these as key levels. And if you're trading intraday, so again, if you're trading intraday, these levels are very helpful. And so with Nadex, when I'm trading binary options, what I'll do is look at these levels and use those as support and resistance to tell whether or not, I'm taking a long or short trade. But here's a couple of the strategies for Nadex that I use. Again, I try to keep things pretty simple. Number one, I'm not the smartest person in the world. I think that if you can figure that thing out, you'll probably be better off. The quicker you learn that, the better off you'll be. And by understanding that, I know that I'm going to be wrong from time to time. But what I try to do is determine overall market direction. So when I'm bullish, yeah, that's see, Steve, that's what's been happening with you. You didn't realize you didn't take care of step number one. But step number three, when I'm bullish, I look for a binary trading around 60 to 80 in price. And the way that binary options are priced, it's priced from 0 to 100. So basically, think about it this way. And yeah, Daryl had typed a link earlier if you're international where you can trade these things. I'm not sure if he's still tuned in, but there's a link in there that you can trade these if you're international. But basically, binaries are priced from 0 to 100. So let's say that the binary option is that the S&P is going to close and it expires at the end of the day. The S&P is going to close at the end of the day at above 1400. Well, if the S&P closes at 1402 that day, that binary option was true, so it pays out at 100. Meaning if you bought it at 50, it paid out at 100, so you made 50 bucks. If you bought it at 60, paid out at 100, so you made 40 bucks. All right. So when I'm bullish, I look to try to buy a binary option around $60 to $80 in price. That means I'll make anywhere from 40 to 20 bucks. If I'm bearish, I look to sell at 25 to 40. If I'm very bullish, I'll look to buy a binary around 30 to 40 in price. If I'm very bearish, I'll look to sell at 60 to 70. And so the way that this works, basically the way binary options work, if we're trading at the current price, so let's say the contract's for the S&P to be above 1400. If we're trading at 1400, that binary will be priced right at 50 because it's basically a 50-50 shot. Okay. If we're trading at 1402 and we've got plenty of time to go, that binary might be placed at 60. All right. So again, that binary might be traded at 60. So that means you got a little bit of an edge. So if you buy it at 60, you basically got a 2-point edge that the thing's going to expire in the money. So again, that's kind of what we're looking at. I try to use the 50 level on the option as an indication of the trade and adjust the position. So if I were to buy something as high as 80, if I were to pay up to 80, basically what I'm doing, I'm giving up some of my gain, but I'm increasing my probability. So again, usually, now they have binary options that will expire in an hour, and they have some for a couple hours, and then they have dailies as well. So you can trade depending on how short of term of trader you are, you can really look at anything. So again, what I'll typically do, like let's say I buy a binary option at 70, then that means that I've got a max gain of 30. So what I'll do is let's say that the S&P is trading at 1403 and the binary option's trading at 70, so I buy it to be above 1400. I've got a 3-point buffer in there. So again, I've got a 3-point buffer in there. And if we trade down to 1400, that'll put me at 50, and I'll look to probably exit the trade. And I kind of use that like a stop area. Why Nadex? I've never traded binary before. Yeah, there are a lot of platforms. There's a lot of offshore platforms, Paul, that you have to be careful with. The reason I like Nadex is it's a U.S.-based exchange. So again, if you've traded Forex before, there's some kind of shady Forex forms off there that are non-regulated and overseas that you send your money to Cyprus and wonder if it ever comes back. And so that's why I like Nadex. It's a U.S. exchange, and I think that I feel a lot better there. All right, let's talk a little bit about some of the stocks and markets for this week. Obviously, we had a big earnings week. It was funny when I was putting the last touches on the PowerPoint. I looked over, saw the Wall Street Journal in my office, and said, it had this right at the top: Google hit by weak results. And And so we'll talk about a couple of stocks. And this is interesting. I actually read this today, and talking about Google and Apple. And you might say, well, hey, I only trade futures. Why do I care about Apple? And this came from Zero Hedge. Apple accounts for 4.5% of the S&P 500 market cap, 3.7% of EPS, and 11% of 2012 returns. So again, think about that. It's 4.5% of S&P 500 market cap, 3.7% of EPS, and 11% of 2012 returns. Now, I'm not talking about the NASDAQ. That's for the S&P. So again, if you're an S&P trader, you have to know what's going on in some of the biggest stocks across the world, okay? Apple's extremely important. So again, here's a look at the S&P. And again, I'm going to just kind of run through a couple of these charts, and then Tony's going to come on and really close things out. Yeah, it's even more extreme on the NASDAQ. But here's kind of what I'm looking at the S&P, is that I really felt like 1430 to 1433 was a big area. We do, at TradingPub, we do some daily educational videos on YouTube, and I'll type in the link, that link didn't work, but it's youtube.com/tradingpub. And if you go back and listen, back from when the market was up at 1445, 1450, the big area that I talked about, that I said, if we start to break 1430, it's kind of all bets are off. That was a big area that I was focused on. And you see here that we kind of defended that area several times, then we broke down. So looking back, you saw how 1430 is very important. We came down, we got back above it, we came back down, and once we broke through it, it was kind of like lights out, that the market just continued selling off. So basically right now, the next area I'm looking at, and Tony will kind of expound on this a little more, but the next big support area is 1390, and this is just from simply eyeballing the daily chart. Look at a lot of support there. Now, what happens if we take out 1390? You got a long way down that you can go. And so does that mean that I'm aggressively long here because we're above 1390? No, it just means that on a swing basis, if we start to break 1390, then I think we've got a lot more downside. And something that Tony's going to talk about a little bit is the US dollar. Now, I'm not going to spend a lot of time on bond futures, but like I said, I learned a lot about bond trading from Tony. And even if you don't trade bond futures, keep a close eye on bonds. If you see bonds start to really rally, and look at this is a daily chart, saw a big rally there. But if you see bonds continue to rally, then that's going to more than likely bring weakness in the equity markets. Money flows into bonds, flows out of equities. So again, if you're seeing bonds really rally, you see the S&P knocking on that 1390 support and bonds are still going up, then I'd really be looking for a short trade. So again, yeah, and that's the thing that we'll have to, we'll keep an eye on. And Tony's a much better bond trader than me, but typically these things will move inverse. Now sometimes you get some government involvement, you'll hear them purchasing bonds, which makes it go up, and then the S&P will go up as well. But again, Tony's going to spend more time in bonds. I want to talk a little bit about gold. And this is a trade that I'm going to take. I'm actually already long gold, but I'm going to put a Nadex position on. More than likely, we're doing that live trading thing Monday. I'll put the Nadex position on. We'll do a gold trade in Nadex and kind of look at a couple different scenarios there. But what I'm looking at on gold, okay, what I'm looking at on gold is Jeff Smith was on the TradingPub this week at 1690, okay. 1690 is a big area to look at in gold. As long as we're above 1690, I'm bullish on gold. I think that we'll get a little pop here towards the end of the month. Again, that's my thinking. You guys could be completely bearish. You might hear other people here that are bearish. I haven't heard what Tony's thoughts are on gold. But basically the way I look at it, we've had a big drop. We've seen it kind of go into this consolidation mode. I'm basically taking a shot here saying that as long as we're above above 1690, I'm taking bullish strategies. Jeff Smith and I actually trade an account together. We talked about this on, I believe on Friday, but we put a trade on, we put a credit spread on of the 1610, 1560 put spread for December. So we sold that for 280 credit. Now, what I'm probably going to look to do is start looking at buying some binaries on Nadex, some end of day binaries, and we'll look at some aggressive and conservative plays on Monday and also look at some bull spreads. Now, I'm not outright long gold. I don't own the gold futures contract. I have it through an options strategy where it gives me a little bit of a buffer of being wrong and still able to make money. And we'll talk about some opportunities with that on Monday. Now, the Australian dollar futures, I know Tony was bullish on this about a week or two ago, and this is something that I really like longer term, and it's important, and I'll say this, as long as ES is above 1390, I like the AUD. Now, the Australian dollar, typically, if the markets are doing well, it'll perform well, and I know that Tony might have a different point of view, but as a longer term trade, I think if the markets can sort of start to recover a little bit, the Australian dollar will start to be a place that could go back up near these highs around the 105.85. In several of our videos on the YouTube channel, you heard us talk about that kind of 104 area being an important area. But again, yes, commodity related, but they don't have a lot of the problems a lot of these other countries have. As far as the debt crisis goes, and it is a heavily commodity-related company, or not company, but country. So we'll talk about that. Now, let's talk about Apple a little bit. And, Apple, the most amazing thing is you had bad earnings. You had Apple spike down to about 585 and in the first 30 minutes after earnings, then it came right back. And the thing to think about is, yes, Apple had bad earnings, but also, it's still a very strong company. They still make a lot of money. And two, keep in mind it's down $100 over the past couple weeks. Okay, basically over 30, 45 days, Apple's already down $100. So you have to think a lot of this was priced in, and I think that's what you saw here. Now, I'm not going to really take any bullish positions in Apple. I'm not going to take any bullish positions in Apple until we can see this thing start to get back above 620. And so, again, that would be for this week. I probably, won't look at, unless we had a really big drop to a big support level. I really want to see Apple get above 620 and hold above that. 620 had served as a really good support level on Apple, and you saw the bulls continue to defend that, and then we finally started to break through and obviously came down. I actually had a put spread on Apple in one of the accounts that I trade. I had a weekly 570, 560 put spread. I had sold for $1.80 a Friday ago, so the last Friday, and it was supposed to expire this Friday. Well, I exited that at 80 cents before earnings. So again, exited at 80 cents before earnings. Now, why did I exit it? Well, you've got to trade like that. Odds are that if Apple closed above 570, I'd make money on it. I'd make the full profit. But looking at it, we had earnings. It was a crapshoot. Mark got it completely right. Earnings was a crapshoot, and so I said, look, I'm not, for 80 cents a contract, that's $80 a contract. I'm not going to sit here and risk losing $1,000 per contract. And so again, the control's kind of out of your hands. When you trade, you always give up some form of control, but you can make decisions on whether or not you want to put it on the line for something like that. I said, I'm not going to do it. Now, obviously, it would have worked out, but I took the money and ran, and Tony will probably talk to you a lot about that. Now, Google is something interesting. Google had bad earnings. Basically, it had been performing extremely well. You saw, it was at the highs. It consolidated a little bit, and then the earnings came out, and you had this huge drop. And actually, I had one of our clients called me the next day and said, hey, why don't we pick up some Google? And this was following the drop. And I said, well, look, let's wait. And we talked about this on one of our YouTube videos the day after Google earnings. I said, and the same thing I told this client. I said, a lot of people, when you have a big drop like that in a popular stock like Google, and type in yes or no. How many of you think Google's a good company? Just type in yes or no. How many of you think Google's a good company? They're smart. They make a lot of money. They'll probably continue to grow a lot. Everybody would say yes. You think about it. We use Google as a verb. You don't say, search for something on the web. You say Google it. I mean, they have completely dominated the search category, and I think they're figuring out mobile. I think they're figuring out how to make money on mobile. But the thing is, so many people think, okay, I'm going to jump in Google now. Well, what I've noticed, okay, this is something I've noticed, is that typically what you'll see, and I've really learned this from Jeff Smith, is, you have a big move like that, don't be the first guy in there buying it. Okay, it's always fun if you can buy the low and it shoots back $10 and make a bunch of money in 2 minutes. But again, don't be the first guy standing in line to try to buy it. Wait a little bit, watch it trade, let it establish support, and then look for an opportunity. And so what we said on our commentary, and we said it pretty much all week ever since Google came out, we said, look, let's be patient. Let's wait and see if we can hold the 670, 675 level, let it establish support, and then get long. The problem with getting long right after a big drop like that is you have no idea where to put your stop. And you can say, well, yeah, put it below the low, but that doesn't mean anything. You haven't seen that support validated. And so give yourself some time, wait for that opportunity. So that's what we're doing. We're watching Google. We're seeing if it can hold 670. If it does this, it kind of starts to consolidate a little bit. Kind of a pattern like this is what we're looking for. If we can consolidate, hold a pattern, and then start to break out higher, then we'll look to get long Google. But yeah, here's the thing with trading. You don't want to be, it's like you don't want to be the first guy there, but you definitely don't want to be the last guy there. Okay, so you don't want to be the last one holding the bag, but you kind of just want to work your way through the middle, and that's what we try to do. So again, it's like we're not going to buy the low, we're not going to sell the high. We just want to buy it lower than we sell it. All right, now let's talk about spread trading a little bit. And Daryl talked about this, Dan talked about this, and I can really credit Daryl, and he'll talk on Monday probably about a hedge strategy, and that's one thing I really picked up with Nadex. But with more volatile markets, and think about this, with more volatile markets, what I try to do is buy near the floor or sell near the ceiling to minimize risk. So the way that this works, and let's look at an example. Let's say that gold has a contract let's say gold has a bull spread contract at 1710 by 1730. All right, so if it's trading on Nadex at 1710, so 1710 is the floor and 1730 is the ceiling. Okay, so if gold is trading at 1713, if I buy at 1713, okay, then my risk is 1710, my reward is 1730. So for something that's very volatile like a gold or oil, what I would do is I would try to buy at 1713, all right, and I'd try to have as little risk as possible and as much reward. Now, in return for doing that, and this is a trade-off. This is if you're trading on Nadex, if you're trading options, if you're trading futures, if you're trading anything, okay, risk and reward are going to be a trade-off, okay? So you're going to have to pay up a little bit. So, for instance, that 1710, 1730 spread on gold, okay, if gold futures are trading 1713, then I might have to pay 1715 for the spread. And you say, well, why are you having to pay $2 more? Well, because I'm capping my risk. And the same reason, you got to have somebody who's willing to sell it. They're going to have to get some kind of a premium in there. So think of it like a time premium on an option. So, this will be so much easier to see on Monday when we have a live market. But for something like gold or oil that's very volatile, then I'll look to try to buy near the floor or sell near the ceiling. I'll pay the premium. So basically, I'll pay the premium to reduce my risk. Okay. So again, on spread trading, I'll pay the premium. Now, for less volatile markets, I'll look at some premium levels and I'll try to take advantage of that by buying a bit closer to the ceiling or selling a bit closer to the floor. So an example we might see, let's say that the S&P's having a slow day, and let's say that the S&P spread is 1400 to 1420. Okay, and let's say that we're trading at 1404. Okay, let's say we're trading at 1404, and I think that the market's going to head down. That spread, so ES futures equals 1404, the Nadex spread might be 1405.50. Okay, so there'd be a 1.5 premium. Okay, a 1.5 premium. So what I might do is I might sell that Nadex spread, bring in that little premium, and take the short trade, and figure, okay, I'll take advantage of that 1.5 buffer they'll give me. And again, like I said, this will be a lot easier to see on Monday. I just kind of want to introduce you to it, to the idea. of thinking about it, and you're either paying premium, and here's kind of a good rule to remember. So reduced risk, big reward equals paying a premium. Okay, so more risk, reduced reward equals receiving a premium, and just kind of think about that. So, and we'll go over that more Monday. It'll give you a better opportunity. But here's an example of an old trade that I had done. Now, the price of the S&P futures at the time was 1354 to 1355. We're trading about call it 1355. I was able to buy a Nadex spread. Look, this spread is 1320 to 1360. So this is kind of what I was talking about, 1320 to 1360. I was able to buy that at 1351. Now, Nadex products are cash settled. So holding till the end of the day, then if the markets didn't move at all, through the end of the day, it would cash settle. Let's say we're at 1355. That would be cash settled at 1355. I'd make 4 points on that contract. So per contract, that'd be $40 per contract. The way Nadex works, it's $10 per point. So again, that's kind of helpful to see an example of that. That the reason that it was paying that premium is, think about my upside on the trade. The highest it could go to pay me is 1360. And it's a little hard to see, but that says 1360. The lowest it could go is 1320. So again, if the S&P were to sell off 35 points that day, then my max loss would be down at 1320, and I could lose $310. So again, by giving up some reward, by saying, okay, I know the most I can make here is up to 1360, and taking on a little more risk, I was able to receive a premium. So that means that I've got a 3-point buffer on my trade. So I think the market's going up, I go long, and I give myself a 3-point buffer that way. Now, that's back when the markets were very slow. So I'd probably be a little less likely right now with volatile markets of trying to take on premium. So I'd probably rather have less risk at the time. So again, we talked about several of these charts. At this time, what I'd like to do is turn things over to Tony. And before I do that, 2 things. One, I want to invite everybody to our Monday session. Here's the link. We're going to do live trading, and you'll get to see some of these techniques in action on Monday in a live market. But one of the things that I'd like to share, and this is kind of an interesting story, and some of you might say, well, and my guess here, everybody here is an active trader, but you'll hear a lot of people say, well, I don't want to sit there and trade a lot, so why do I need to learn about the markets? Well, something that Tony wrote in his commentary at the very beginning of this year was that interest rates tend to decline in a presidential election year. So let's think about this. When you start at the beginning of this year, what did every person that you heard talking about bonds say? Pretty much everybody talking about bonds would say interest rates are at an all-time low, bonds are a bubble, short the bonds. What did Tony say? He said, look, historically, in an election year, interest rates decline. So if interest rates decline, that means bonds go up. Well, looking at it, obviously we've had some good trades throughout the year on the long bond. Something that I did, and my wife and I were looking at buying a new house, and I said, okay, let's think about this. Interest rates decline in a presidential election year. The election's in November. So if we're going to look to buy a house, it'd probably be a good time to move, sometime this year and get something locked in. And so basically, and I sent Tony an email about this, but basically locked in, when we locked in the mortgage based on when we locked it in versus if I had done it the previous year, listening to Tony and waiting for the interest rates to come down a little bit, I think it saves us over, looking at a 15-year. That's one thing, with the rates so low, we looked at doing a 15-year of, I think it saved us well over 0.5% or maybe 0.75%. I mean, it's a tremendous amount, which if you look at that over 15 years, I told Tony, I was like, basically, I paid for your service well over what I paid in over the next 15 years, and that'll keep coming to me. So that's money that I saved from it by understanding the relationships of the market. And so again, it's just, there's so many ways, not just in your trading account, but just in everyday life, and that's big money when you start talking about the type of money you can save through that, or knowing, hey, if you're looking to refinance, interest rates decline in a presidential election year, what are we about to have, the election? It might be a good time to refinance your house with these interest rates if you haven't already. And you can save a lot of money that way that goes directly to the bottom line. So yeah, and that's the thing, Kirk, that I did, and I don't think it was a coincidence. I think it was by understanding the bond market. So Tony, at this time, I'll turn things over to you. What I'm going to do here, again, before Tony gets started, if you send me an email, open up your account, your Nadex account. They're one of the great things about Nadex is that they're geared towards individual retail traders. And so somebody asked, why Nadex? Why not one of these other companies? It's a U.S. regulated exchange. They're dedicated to educating retail traders. They don't. You look at some of these other exchanges or offshore stuff. Those guys are trading against you. So at the end of the day, they make money when you don't. Nadex is an exchange. They're not trading against you. It's in their best interest that you make money and keep trading with them. So again, you can open an account by clicking the links there. What I'm going to do is post a slide of everybody's links.
Hey, good morning, everyone, or good afternoon, good evening to those in Europe. I'm assuming you could hear me. Cool. I'm just trying to take over this this thing. This was sort of a surprise for me, actually. I sit here Saturday mornings and I write my weekend commentary, and it's quite extensive, actually. And I thought, I know Morgan's having an event today, so I'll just listen in. And it's funny because Morgan, on his TradingPub site, he only recently has started doing these sort of 4 or 5 minute presentations where he throws up a couple, 3, 4 charts and gives his view of the market, shall we say, or those particular markets. So, of course, I'm being affiliated with Morgan, knowing him for a good year now. I'm interested in seeing his work and hear his opinion on the market, because Morgan subscribes to my business, so to my work, so he hears my opinion every day. I'm just curious to see what his was. And my first comment to him today, as we're messing in on a private chat, is, Morgan, I really like your work. You do really well at reading the lines, but sometimes this market is more about reading in between the lines, and that's what I feel. I bring to the marketplace is I look at the whole of the marketplace, and it's funny because I sent Morgan a Canadian dollar chart, and he sent me the chart about 3 weeks ago, 4 weeks ago. And he said, "What do you think of this?" A chartist friend of mine sent me this, and there was a couple of bullish patterns on there. And I said, "Well, actually, I think it's a head and shoulders top, and sure as can be." Here, you know what? I'll just pop that up real quick because this chart is actually in my weekend commentary. This is the Canadian dollar, and this is a head and shoulders top, and I don't know, this one gentleman was calling it some kind of triangle with bullish implications, and I'm like, oh, I don't know. And Morgan sent me it when we were like up here, and I said, I don't know. I think we're building a head and shoulders top, and sure as can be, here we go. And of course, if they like to look at the oh, well done, Morgan. You were thinking about buying it, actually, weren't you? And that's, see, Morgan's a clever lad, because okay, so he's got an analyst, a well-respected analyst, no less, sends him a chart and says, "Hey, I really like this market." Well, Morgan's not stupid. Morgan comes right away, let's get a second opinion from Tony. And I'm like, ooh, I don't know about that, And I did point out a couple of things, like this guy might be a well-respected analyst, but he's not a technician. And he started doing triangles with the point down here. And anytime you do a triangle, it should always start at the top. And there is no triangle here whatsoever. But that's neither here nor there. This market right here, if this was the return to the neckline, the Canadian dollar is in trouble. And some little story goes, if the Canadian dollar, I mean, it sort of gauges the world economy to a certain extent due to the fact that they're producing a lot of goods, a lot of minerals, commodities. So, I'm keeping an eye on this, and the objective is down here at 98.50. We've got a 200-day moving average here at 99.95, I do believe, and if we get through there significantly, I think you can keep an eye on this currency actually, because if we get through there, you can kiss the rest of the other bourses goodbye. And this weekend, I'm looking for a return to the neckline in that market. I'm looking for a bounce in these indice markets, but that doesn't mean we're going to get it. But going back to this treasury bond, and I'd like to about a month ago, I deal with correlations. Correlations are my biggie. And look at this. I mean, we go back here. This is May. The treasury bonds have traded sideways for 5.5 months. There's nothing there. There's absolutely nothing there. If anything, we had a little double top here. If we got below 147.10, the objective was 144 something, failed again. And it was up around here somewhere when I spotted the first time I'd seen it in a long time. And this was about a month ago, maybe 4 to 5 weeks ago. There was a day in particular, it was a Friday, when the bond market closed lower and the E-mini S&Ps closed lower. Now, over the past 3 years, we've seen the opposite happen, where the bonds and the SPUs close higher together, but hardly ever have we seen it close lower together. And I remember that weekend writing a commentary like, you know what, that's a small warning flag here. Be careful, something's going on, it's a warning flag. And 2 days later, on the Tuesday, it happened again. Now, 2 out of 3 trading days in a row, market correlations that we are familiar with over the past 3 years are breaking down. And now I write a commentary. I not only have warning flags waving, they're waving in both hands. I refuse to trade this market at the moment. And in all honesty, I didn't even want to trade, and I haven't traded the indices that much. When something that and this is a good trading lesson, if you're using correlations, if whatever's been working for you in the past, when that starts breaking down, don't let your ego control you. Pull away from the market and let the market begin to tell you what it wants to do. Are we going to start seeing new correlations? I mean, you want to talk about, I haven't traded a treasury in over a month, and look, I haven't missed anything. I haven't missed a thing. And I like to write here, I remain on the sidelines and will leave this market to bond traders who are obviously much smarter than I am. I mean, obviously I'm taking the piss, shall we say. But if anything, we have a little double bottom here. Well, guess what? We had a little double top here. That failed. This will probably fail. The treasury notes have a double bottom. I don't envision any kind of movement here for the remainder of the year. What I am looking for, though, is eventually, and this goes back to what the story that Morgan was telling earlier. This right here, and this is what I was calling for big time. This is shall we call it a rounding top. And this low here at 135.05 is from October 28th of last year. This low here is March 19th of this year. And some really well-respected analysts, friends of mine, 30-year veterans, were calling this a rounded top. And the only problem I had with it was, in presidential election years, interest rates historically go lower. And it's March, and they're thinking interest rates are going to go higher 8 months before a presidential election? Are you kidding me? I just, no way. This is a bubble. We finally saw the bubble. Well, guess what? My people caught from 135. I mean, the objective is 157.17. We never got there. We got to 153.11. But what these, if you didn't, even if you didn't sell this move, what you missed out on was an 18-point rally. There's 32 ticks in a point. 18 times 32 is like 500, 600 points, something like that. They missed it. They absolutely missed it. And now we've missed nothing now. We've missed nothing. The market's doing nothing. I'm not going to be trading it. I'm having a very difficult time when correlations break down getting involved. But I do believe this is going to 157.17, that double bottom objective, on its way to 167. I think interest rates I think that this 10-year rate is going down to 1% and even lower. I read a lot of smart money. And the smart money, and if you think about what's going on in the world, at the end of the day, I'll tell you why, Kurt. At the end of the day, well, put it this way. Do you think John Corzine, if he had his choice, he'd invest in European bonds again, or do you think he might look at the American market? Huh? Do you think anyone's going to invest in any other bond but a U.S. bond? In times of uncertainty, where does the money go? It comes right here. In times of uncertainty, where does the money go? It goes into the U.S. dollar. Come on, Europe's in complete and utter disarray. Which country's going to need to be bailed out next? So why do I think interest rates are? Because it's supply and demand at this point. You've got the Fed buying bonds and the rest of the world buying bonds. Where are rates going to go? The Fed's trying to stimulate the housing market. If you can get the housing market stimulated, then the economy will turn around. But until you get the housing market stimulated, which they're not doing, and you have to remember, housing is a commodity. Housing is like any other market. The market is in decline. The housing market is in decline. The first thing it needs to do is bottom out. Then after it bottoms out, it's like Morgan said, it has to build a bottom. You have to find out where your stop is going to go. It hasn't bottomed out yet, and it will take a couple of years to build the bottom. Where you may miss the bottom is in interest rates. And at the moment, with interest rates where they are right now, what's the 10-year? The 10-year is 1.750%. The 30-year is 2.918. These are historic lows, and it sure doesn't feel like it's like the 10-year is going to 2.5% or 3% anytime soon. The first mortgage I ever took out was like 12% on a home I bought in 1980, I think. So Morgan's laughing all the way to the bank. What did you get, Morgan? 2%, 2.5% on your 15-year, 2.75%. I don't know if he's there. Anyhow, I'm gonna throw up one more chart. And Morgan, I know you fancy the gold market here. It might be good in the short term. I don't like it in the long term. And the reason I don't like it in the long term is because of a gentleman named Paulson, John Paulson. He got one trade right in his whole life. He shorted the housing market. Since then, he gave half of it. His fund lost 52% in 2011. And I'll tell you another thing, and this is something I was going to speak about in Las Vegas soon. Paulson started a gold fund. Now, why would you want to invest your money in a gold fund? You want to invest your money in your own education, because Paulson's going to take 2 and 20. You can go and buy Krugerrands if you want. Why do you need to invest in Paulson? And you're only as good as your last trade. And his last trade was he lost 50% last year. This man, is long out the yin yang, of the gold market, and he was drinking Dom Perignon just a month ago, and look at it, and all of a sudden, what gold trade? 1690 something on this week, 1690 something. I talked with a very dear, respected English friend of mine who's been in the market since the mid 70s. And we're talking about, don't let this gold market get below 1,500. It'll be 1,250 before you could say boo. Everyone loves the gold market. And what happened in 2008? Gold broke from over $1,000 down to $750 in harmony with the stock market. So don't ever think this is a lock, and instead of investing your money in Paulson's gold fund, invest your money in an education, a market education. Anyhow, I'm going to throw up a chart here, and I'll leave you with it because Morgan and I are going to be doing our own Saturday thing. I think Morgan, second week in December 8th, I think. But this is a chart that I put up in every weekend commentary. I put it up, and I still believe, and this is one of the reasons I'm still thinking that interest. This is the 10-year, and this is the monthly chart, and you can see this is a legitimate channel. This is a channel, plain as can be. These lines are in perfect. I don't know what the word is. Who cares what the word is? They match up nicely. And you can see in 2003, at the beginning of this, the market sold off hard. In 2008, again, sold off hard. What happened this time? There's no sell-off here. There is nothing here. There's nothing. We're just trading sideways now. And I've been looking for and calling for 2 consecutive closes, and I need them up here somewhere above this channel. And if we get 2 consecutive closes on a monthly basis above this channel, my target's up here. That's all you do is you measure from here to here and put in another line. My target's up here. And we haven't gotten it yet. Here's a higher close, comes back below her. Higher close, closes right on it. Closes right on it. Now this month we're trading below it. I've been writing to my people all week, and you could take symmetry. Well done. Thanks, Larry. I was a math guy. I wasn't an English guy. We have on monthlies, and this goes back to October of 2011. Highs at 131.10 to 131.16. These were critical levels, and I keep on writing to my people. If we ever get to this level, and bloody hell, we traded 131.22 this week. 131.22 on Thursday and 131.25 on Friday. And I had bids in scaled down from 131.16 down to 131.10. I was going to buy the 10-year note at this level, and I was going to run them. And we never got there. We may get another chance. But last thing when I'm talking about but you can see how they sold off. They're not selling off. So anyone who thinks interest rates are going down, I think they're wrong. And it's right here. This is a grind higher. Jeff Smith at DTI, he taught me I'm okay. I just got a private message. Jeff Smith at DTI, he taught me one thing. Chuck Crow actually, about markets that grind higher they grind higher. So that's all I've got for you today. Morgan posted a link. We're offering a great deal, like $290 until the end of the year. I write daily, blah, 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 blah. Morgan, thanks for having me.
All right, great.
We're going to do this
Tony.
again, I think,
really
December 9th. And we're going to have a good session.
Thing.
So that's all I have. Cheers.
I got to know Tony because I signed up for his commentary. I still get his commentary every night and read it. You'll hear me. And the daily videos that we do, a lot of times I'll reference Tony or his numbers. But again, phenomenal trader. I think that you guys realize that. We post a link in there for Tony's service through the end of the year. And if you do sign up, he's writing his big report for Saturday. You'll get that tonight. But we appreciate you guys being here. What I did, we had a lot of great offers. And yeah, Tony, I like Tony. The good thing about Tony is you know exactly where he stands. He's not going to hedge what he says. If he thinks gold's going up, he'll tell you. If he thinks gold's going down, he'll tell you. If he thinks that bonds are going down, you'll know exactly what he's thinking. So again, I really appreciate him being here. He's been an integral part of the TradingPub and over the past year, and we're very thankful for that. So if you get a chance, I'll leave these links up here for you. If I'm just going to run through the offers real quick again. Open an 8X account. You can open it with as little as $100. I recommend putting probably $500 in there or $1,000 to get started to give you some room. But open the 8X account. Dan mentioned today that he'll actually get you a demo extended for 1 year. So again, you can practice on that for a whole year. If you email him, just send him an email. The way it's set up, you get 2 weeks, but email him at dan. And I'll type this in again. dan.cook@nadex.com and just say, hey, Dan, I'd like to get a demo for, extended for a year. Daryl has a lot of free videos. He trades primarily Nadex, so a lot of free videos. He's going to be part of our live trading session on Monday. You can click on that link to get access to those videos. Marcus, who spoke on the fib lines, he's got that ebook that you can click there. Michael, who did an outstanding job today. He spoke just before I came on. He's got his free market forecast that you can click and receive that. And then Tony's commentary through 2012. Click the link to receive Tony's commentary through 2012. And then also Monday's live trading session. If you want to register, click that link. I recommend getting a Nadex account open or a demo account open just so you can follow along before Monday. But if you want to wait and see Monday before you make a decision, you can do that as well. So thanks again to everyone for being here. And again, I'll leave this up for a couple of minutes if you want to. We'll put a timer up for 5 minutes if you want to get those links. And then when we shut the room down, it'll take you to a page where you can register for Monday's live trading session. It's going to be in the TradingPub room, so the same room that we're in today, and it'll be from 8:30 until 10 o'clock. All right, good. You guys enjoy today? Good. The recording, it'll probably be Monday afternoon by the time we get the recording up. So we'll get the recording up Monday afternoon. All right, good. Well, we hope you enjoyed it. And if you did enjoy it, if you don't mind, send an email to Dan and just let him know. Nadex was a sponsor of today's event, so they help us keep everything free here. But send him an email and just let him know how much you appreciated their time and everyone's time today.